Welcome everyone to the Intelligent Solutions ITAM webinar, Financial Discipline in the ITAM Organization. My name is Lynn Weiss and I'm from ITAM and I'll be the moderator for today's webinar. So before we start, I have some logistical items that I want to cover for our audience. The first is obviously all your lines are muted with the exception of our presenters. If you have any questions, just click on the type message here box to your right and put in your query. There will be an open Q&A session at the end of the session, and all questions that we do not get to before the close of this hour-long session will be answered via email after it closes. There will be a link on the ITAM website available hopefully early next week, as well as the Intelligent Solutions website to download the recorded event of this webinar. And for everyone that's ITAM certified, this counts as 2 points towards your ITAM recertification. And please note that we want to remind you that you need to track your own webinar participation throughout the course of the year and provide proper notification to ITAM when that occurs. So to start things off, I'd like to introduce you today to our two speakers. First up, we have Keith Rupnick, who is the Education and Content Director for ITAM. Then we have Brett Husselbaugh, who is CEO of Intelligent Solutions, and our special guest is John Muller, who is from Quest Diagnostics. Keith, I'm turning it over to you.
Thanks, Lynn, and welcome everyone to today's webinar. You're going to get some very actually excellent information today that it's going to be applied in multiple areas of your IT asset management. You know, one of the things that we talk about in our classes are the three business drivers behind IT asset management, and those three are efficiencies, risk, and financial. Today's topic is all about financial. And when you listen to this webinar, which I'm really excited about, you're going to find, one, a clever way of budgeting for your SAM initiatives, which is something that pretty much all members that we talk to are looking for solutions for that very problem. The next piece to it is a great tool or a great methodology for selling IT asset management to your financial group. And again, that is another thorn in our side where we're attempting to show what the value that IT asset management brings to an organization. And just as important, this is so elegant yet so very simple. I think what you're going to learn is a really great feather to have in your cap, another tool in your tool belt to help you with your IT asset management program, not just in managing it, but selling it to your organization. So sit back and relax, enjoy the show, take plenty of notes, and have those questions ready at the end. Thank you.
Okay, Keith, if we could move to the next slide, please.
Okay, my keyboard went a little crazy here, so give me a second. There we go.
Okay, great, thanks. As Lynn mentioned, my name is Brett Husselbaugh, and I am the CEO of Intelligent Solutions. I've been in the asset management space now for 22 years, and I've seen a lot of different things over those 22 years, a lot of different customers, a lot of different implementations. And lately, I see a lot of emphasis or focus on software. And it makes good sense. Anymore, software really represents the highest value of the hardware-software thing that you call a computer. And so we're going to start this webinar by recapping a concept that we covered in our previous webinar, which was done back in January. We're just going to do a recap, but we do give you the link back to that webinar if you want to watch it in its entirety. So we're going to talk a little bit about what we call the managed software list concept. And once we've done that recap, we'll move forward. And the next question is, okay, let's say we do this thing called the managed software list, and we form our compliance position, then what? We're going to talk about what happens then. And then finally, one of the things that that help you prepare for that then what is a concept that we're going to introduce called the software bank account. And really, what we're going to do is turn that over to John Muller from Quest Diagnostics, because he's going to talk from firsthand experience. He's actually done this and has been doing it for over 3 years now, and he's going to talk about the challenges he faced with the concept and getting it sold in his organization, but also the benefit that it has brought to his organization. And I will tell you, as you go through, you'll learn that John's got a fairly strong financial background. So you might walk away thinking, okay, well, John can make it work, but can I? We've actually been able to take this concept forward and make it work in other clients as well. And as a matter of fact, my personal experience is that when you engage the finance group, they're actually very supportive of this concept. So yeah, as Keith mentioned, it is a great opportunity to bring them in as an interested stakeholder and a value recipient of what you can do in ITAM. So as we move to the next slide, we'll cover this thing called the MSL. So as I mentioned, we first talked about this concept back in January. And in its simplest form, the concept really is a recommendation. And the recommendation is focus your energy on your highest value, highest risk titles. And if you do that, you'll find you're only looking at about 10 to 20% of all the titles in your environment, but you'll be covering 80 to 90% of your value and risk. And your risk and value exist in the same spot, in the same titles. And so it's kind of a simple piece of advice, but to me, I'm still surprised how many folks, when they think about software asset management, feel the need to try to attain what I call a zero-risk position and go after what ends up being sometimes 1,500 to 4,000 and more unique titles in a given environment. And to try to understand your compliance position, your own position, your deployed position, and the terms and conditions of the license agreements, or even final license agreements of that many titles, usually what it causes is the software asset management group to just get completely bogged down and not produce anything of value for a long time. I was working with one client, 3 years they've been at it, and still hadn't really come to any conclusion with producing value. So the strong recommendation is start where the value is, start where the risk is. That's the most tractable part of the solution, and usually ends up being the titles you know the most about anyway. And so now if you embark on this thing called the managed software list, what does it mean to be on the managed software list? Because it kind of elevates the meaning of a title that's on that list. And one of the things that we recommend is you really want to start negotiating standard license terms for those. A lot of people don't realize that you can negotiate it. The license comes with the product. You look at the license. That's what I have to agree to. Fine. It's a negotiable, like any other contract. And so you can negotiate some of those terms. And the ones we usually recommend you attack first are anything that impedes transferability of that license. Because what you really want to do is create value by harvesting and reusing software licenses, and any terms that in there that require you or impede you in any way from being able to transfer that license, you want to try to start negotiating those out as you renew, as you renegotiate your contracts as they come up for renewal. If it's on the MSL, it means you know your own position. You know your entitlements. You know your T's and C's. They're documented, and you can get to them. And you know which ones are in force and which ones aren't in force. You know your deployed position. You either have auto discovery helping you out, or you have usually what we recommend or put in place a series of what we call application owners that help you understand and document your deployed position. The point is that you know your compliance position at all times. So this is not something, a project that you spin up because you got a renewal facing you or an audit coming in, and then you go out and scurry and try to understand your compliance position. This is something that you proactively know at all times if it's on the MSL. The other thing that we recommend if it's on the MSL is that you change your purchasing practices, and that ITAM is the only organization that purchases MSL titles. And there's a deep discussion and a reason for that, which would be a topic of yet another webinar. But that is a strong recommendation. And if John gets to talking about that, you'll see that at Quest Diagnostics they have done just that. They've actually gone to purchasing and shut down any attempts at purchasing MSL titles. It gets rerouted right over to ITAM, and ITAM handles those purchases. So as we move to the next slide. This is also a concept that we covered, and if you want to look at the details of how this is done, then I would invite you to go look at the previous webinar. Just follow that link. But when you're bringing up the MSL initially, what things should you consider? And usually what we do is we form two knee curves, one on ubiquity. So in other words, where do I have the most? What titles do I have the most of deployed in the environment? The other one on spend. Where am I spending most of my money? You intersect those two knee curves. And then you also consider where have I been audited before, so I got probably a higher risk audit there. And then known aggressors. In the industry there are some publishers that are known to be aggressors in auditing. So you definitely want to get their titles or a representative list of their titles on your MSL. That represents your starting position. You focus on bringing that MSL up, get it remediated, any deployed positions that are in excess of your own positions, and then you can move forward with the MSL once you have it established. We also recommend once you understand or have candidates of titles that should be on your initial MSL, that then you go investigate current license terms so you understand any impediments that you have, any limitations that you have, and things that you want to try to negotiate out the next time around when those come up for renewal. So as we move to the next slide, let's talk about what happens when you move forward. I'm working with an actual client now that has found themselves in this position, and this is a position that you really want to try to avoid being in, and that is, okay, we got an MSL figured out. We got our auto discovery feeding us what it's finding. We got application owners feeding us the non-discoverable titles. We know our own position, and now we know our our compliance position. Well, as soon as you do that, you're most likely, if you're like any other company, to document the fact that you're out of compliance on several titles. One or more titles you'll be out of compliance on. If you're not ready to react to that, then you could have a problem, because now that you've documented it, every day that goes by, you're technically in willful violation of copyright law. Because now you know about it, you've chosen to do nothing about it. So you really want to be ready to react once you form that first official documentation of your compliance position. There are two ways that we see clients feeling that they can go once they've done that. Number one, well, we can just go deinstall sufficient titles to bring ourselves into compliance. There are some practical considerations, like who gets the or who has to give it up. That's one practical consideration, because everybody who has it might feel they paid for it. So you got that practical consideration of who has to give it up. The other lawful consideration is that whether you know it or not, and if you don't, there's an excellent white paper on our website if you download it by Katya Lesin, who's an attorney. She went and investigated and documented really well copyright law as well as contract law and how it pertains to software. And one of the things in copyright law is that if you are found to be in violation of copyright law, one of the remedies that the publisher has is that they can come after your company for profits that were generated during the time which you were violating copyright on their titles. Now, is it done? Probably not, but you are at risk of that because the law does allow that remedy. And the burden of proof is on you, not on them. They'll come after you and say, you were using our software for a year without paying for it. You were in violation of copyright. We're coming after X% of your profits because we feel that those profits were generated as a result of your use of our software. You have to prove that they weren't. So it's a risk that you have of just taking the route of, hey, let's go deinstall it. It's not, you're not 100% clean doing that, although generally, practically, you're probably okay. The other side of the equation is, well, let's buy licenses. And if you follow that, then the question becomes, well, who's going to pay for it? Because anyone who has it installed on their system probably feels they already paid for it, so you're not going to go out to the business units and find a lot of receptive business units to saying, oh, yeah, okay, we'll write the check. So then the question becomes, who's going to go ask for the money, because it's unbudgeted and unexpected. And there have been a number of CIOs or high executives that I know of that have had to go ask the CFO for $1 million sometimes, 7 figures, for unbudgeted because of the results of an audit they just underwent. And it's embarrassing. It's embarrassing because suddenly the CIO is exposed as to, obviously you're not doing your job at managing your software licenses. And then it's also, it could be material. If you're a public company, that could be a material hit on, it's going to be a material hit on somebody's P&L, but it could be a material hit on your public reporting too. So no one wants to be in that position. And as we go forward, you'll find out that this software bank account is a great way to protect your executives from ever having to go ask for that unbudgeted funding. Okay, so as we move to the next slide, let's say that you actually have been up and running with a software asset management program for some time. As John speaks, you'll find out that he's had an asset management program in place for a little, just about 3 years now. So he's had one that is still maturing, but it has been able to accomplish quite a bit to date. But even if you're beyond that and you feel like you are at the top of the world and as mature as you can be with software, what you need to start to get your well, you probably get this, but you need to start selling this concept to your executives and help them get their minds around the fact that there's still going to be a liability. There's still unknown liability out there for software. Software contracts are complicated. Licensing is complicated. And even the person who negotiates on behalf of your company, a week after they negotiate, they probably forgot half of the terms they just agreed to, if they even knew what the terms were. And you get one level removed from them to the people who actually support and install the software, you generally really don't know the terms. They think they do, but they don't. And that's oftentimes how compliance issues begin, because people think they have the right to install software, and they do it, and they don't realize that the terms actually predict that or prevent them from doing that. And you create a deployed position over and above your current owned position. So if you get your mind wrapped around the fact that, okay, there's always going to be liability. It doesn't matter how good we are, how mature we are, there's always going to be a liability. Then you can help to understand or sell the concept that we're going to talk about, or John's going to talk about, this whole bank account concept. Because really what it is, it's a savings account for saving for that rainy day, for when you're likely to get audited and have some result that someone's got to pay for. Well, the bank account will pay for it. And that's how you keep everybody out of hot water, basically. So anyway, let's move on to the next slide. And at this point, I'm going to turn the speaking control over to John Muller. As I mentioned, John's with Quest Diagnostics. He's been doing this for over 3 years now. He's got a lot of great insight and ideas and experience on asset management. And I'll let you. He's got this first-hand knowledge for him. So I'll let him introduce himself and then take you through how this bank account actually works. John.
Thank you, Brett. Good afternoon, everyone. As Keith and Brett told you, my name is John Muller. I am the IT Asset Manager for Quest Diagnostics. Quest Diagnostics is the world's largest medical laboratory testing company with revenues in excess of $7 billion. And as Brett stated, we began our IT Asset Management planning and implementation 5 years ago, and we have been live on IT Asset Management for the past 3 years. So on the previous slide, Brett spoke about the fact that all of us, regardless of how mature our SAM practices are, because of the complexity of software asset management, we all have some unknown license liability. It exists. It's a true liability, but we're not able to quantify it. The question is, for you as asset managers, in the absence of any software compliance insurance, what will you do to maintain the integrity of your IT asset management efforts and your SAM program while protecting your company from a budget-crippling financial event, such as a software audit? Software audits, as we all know, are on the rise. Probably any one of us at this moment are undergoing one. I've had 4 in the past year. They're ramping up. They're definitely not ramping down. 5 years ago, we've had none. I've had 2 inquiries by the Business Software Alliance as well in the last 2 years. And what are we going to do to defend ourselves against that? As we move to the next slide, we're going to talk about the concept of a software bank account. If you have a financial and accounting background, what we're talking about is an accrued liability account for software expenses. And the software bank account has 2 purposes. The first one is to fund baselining compliance one time for the additions of the application titles to your managed software list. What does that mean, one-time baseline compliance? What it means is, after you've researched your terms and conditions, you've investigated your entitlements, your tools are telling you your deployments, you've determined that you're under-purchased and you're out of compliance. What you're going to do is you're going to use this software bank account to one time reactively bring that title into compliance. And from that point forward, using the MSL approach, you're going to proactively manage compliance and charge back the consumers of the software. The second way that we use this fund is basically to fund the unexpected. Software audits that are unexpected for non-managed software list titles, titles where you still haven't gotten there in your research efforts to bring them onto your managed software list. So as we move on to the next slide, even though this all sounds very logical, selling the concept is not easy when it doesn't exist in your budget already. We've all had the privilege of working for executives who are basically in denial. They believe that the desired state of your software asset management program is the actual state of your software asset management program. They don't understand that there's been little to no investment made in SAM in your company, and they don't understand why you can't fix this all at once. They can put you back on your heels. You need to feel very confident in pointing out to them the facts, the dollars, the level of investment in human resources, in tools, in process development, in building a SAM program. You're likely to find, where I was 5 years ago, that there was none. All of these pointed questions I received, and I had the wherewithal to be able to stand up and say, you haven't made any investment in this area. Why would you expect it to be running well? Why would you expect that there's no liability? Why are you upset that you just paid a settlement on a software audit with data strictly from the publisher and you were unable to defend yourself? Now, the other thing that will speak to executives, as Brett mentioned previously, is risk. Executives don't like risk. You can present the risk argument to them and explain to them that you're trying to protect their budget, protect the organization from the unknown. But even though that it's unknown, it exists, and that you're working on building a program to quantify it. The other thing that you'll have to do periodically in building a software bank account is you're going to have to justify the amounts of your bank account to your internal auditors. It might sound difficult, but it's really not. As you begin to work on creating your SAM program, you will encounter many issues that you will be able to quickly provide a reasonable explanation for the amounts and the balance in your accrued software liability account or software bank account. So as we move to the next slide, we're going to talk about how this works in practice. Okay, in my company, the budget for the software bank account is in the IT asset management budget within IT, and if you choose, you may allocate that cost to your business units. They are, after all, the prior consumers of the software for which you have a liability. What you do is you establish what is going to be the monthly amount that you are going to deposit or accrue for your software liabilities. This is going to be a monthly amount that's going to run throughout all 12 months of your budget. What you're also going to do is establish a ceiling dollar amount where you've determined that everything above that dollar amount is acceptable risk. So you're only going to save up to a dollar amount where the risk is not acceptable. Everything over it would hit the P&L in 1 month and is determined to be acceptable risk. So in this simplified example with these small dollar amounts, you'll see that we've determined that our monthly amount to be saved in our bank account is going to be $10,000, and that we have a cap of $40,000. We've determined that that's the most we're going to save. So every month for the first 4 months of this year, we've saved $10,000, and it's hit the IT asset management budget each month, and $10,000 per month has been saved till we reach $40,000 in April in our accrued software expense account or our software bank account. Now, as MSL applications are added, we make withdrawals. If we have an unexpected audit, we're able to make withdrawals without any impact, large impact to our IT asset management budget or our operating expenses. And the last bullet on here is that the utopian world is when you get 100% of your applications on your managed software list, then in theory you would be able to discontinue having a software bank account because you're actively managing compliance on all of your titles. Okay, we're going to look at an example slide and step through the examples, and we'll take this through. So if you can move to the next slide, Keith, thank you. Okay, transaction number 1 in this example, our ceiling or cap is $60,000, and we've agreed that our monthly amount that we're going to deposit into our bank account that we're going to accrue is $20,000. So each month from January through March, we hit the corporate ITAM budget for $20,000 per month, and we save $20,000 in our accrued software expense or bank account. Okay, as we move to May, we've been working on expanding our SAM program, and we're adding an MSL application to our managed software list. And once we've researched our T's and C's, understand our license entitlements versus our deployments, we've determined that we need to purchase $12,000 worth of licenses to bring ourselves into compliance. So what do? We withdraw $12,000 from our account, and if we could not move to 3 yet, please, Keith, thank you. If you could just go back up. We withdraw $12,000 in May from our account, and our accounts payable vendor pays our vendor the $12,000 we owe them without any impact to the middle T account, which is your ITAM management budget. Okay, as we move to the next transaction, we're below our cap, right, by $12,000, which is less than $20,000 we were going to do per month. So at this point, we save another $12,000 in our software bank account, charging IT asset management for the $12,000. Now we're back to our $60,000 cap. In the next month, we have that unexpected audit settlement that we've been speaking about. And the settlement is for $55,000. Well, instead of $55,000 hitting our budget unexpectedly, we withdraw it from our software bank account. Accounts payable pays the publisher who audited us, and no impact on our P&L. In our last transaction in August, we go back to saving the $20,000 per month that we determined in the beginning of the year we would save until we reached our cap. That's basically how it works. You can see that it keeps your expenses level. It prepares you for that rainy day. And I'm going to hand the presentation back over to Brett Husselbaugh to summarize the concepts that we've talked about.
Thanks, John.
I'm sorry. I have one more slide. I'm sorry. So let me talk about my personal experiences. My personal experiences have been this. If you can clearly present the risk, or even if you had a negative event happen like a software audit, that's your opportunity to be able to build your ITAM program and to be able to build this concept of a software bank account. Take advantage of those opportunities. That's what I did. We had a negative event. When I heard about it, I pounced. That's how I got my program off the ground. That's how I opened an opportunity for myself. Work with your finance organization to determine and defend the amount of your monthly deposits. It might be small to begin with, but small is better than not at all. But once you present that risk and you deal with where you can get your ceiling to and the types of negative events that you can happen, your finance organization will work with you. They don't want to, any more than you do, go with their tail between their legs up to management and say that we have to take a large hit to our income statement in any one month. Communicate. Constantly communicate your successes. There's been many, many opportunities where the unknown presented itself in the last 3 years that I was able to mitigate those unknown hits with this accrued software liability account. It's a big world that we're all playing in, and there's a lot of unknowns. And when you get the opportunity to save your executives from an embarrassing moment, feel free to go up and communicate it. You'll receive recognition for it, as I have. And lastly, the bank account has been used to fund the unexpected as well. And it's been used to fund the purchases of licenses where I've had process failure in IT asset management. As we all know, if you're the 90-10 rule in IT asset management, you're probably world-class. What do you do about that 10% when that technician fails to do something, fails to harvest software, things of that nature? You can cover those process failures with this account to bring yourself into compliance. So now I'm going to hand it over to Brett Husselball, and he's going to summarize what we talked about. Thank you very much.
Thanks, John. So just to recap, let me recap by recapping. We recapped the MSL concept that we had a webinar on back in January. I would encourage you to go follow that link and watch it if you missed that. Especially strongly recommend that you adopt an MSL approach. John can attest, to how much that has made the solution tractable and got him to benefit and able to demonstrate benefit very quickly, as opposed to getting bogged down. And like I said, I've worked with companies that did not do that. We came in late, and they did get themselves bogged down trying to do all titles. So strongly recommend taking the MSL approach, and we did cover that. Then we said, okay, well, what do you do once you've documented your compliance position? Because you got to be prepared for the fact that you're probably going to be out of compliance on one or more titles. So have a plan, be ready for that. And then one of the ways of being ready for that is beforehand, set up this software bank account concept. And as John mentioned, he walked through, it is doable. As you can see, John has done this firsthand, but we've also worked with other clients and had them be able to set this up as well. And as I mentioned, my personal experience is finance is actually very open to this. You won't find them setting up roadblocks. They'll be working with you, trying to figure out how to get it done because of the obvious benefits that it brings to them and to the whole organization. So the savings account is, as we mentioned, it's really the best analogy, and it's for that rainy day when you have unexpected expenses. Instead of somebody having asked for money, you got it. You set it aside, so you got it for that event. So with that, turn it over to Keith again for any kind of questions we might have that we can spend the next few minutes answering.
All right, I think I'll take the com at this point. Thanks, Brett. We have a couple of questions here. We're going to start out with this one. How did you approach determining the size of the initial budget, and what sort of year-on-year budget reduction have you achieved? Probably goes over to John.
The size of the cap was based on our understanding of our compliance position, specifically around where we stood with aggressive auditors and how many products we had out there, Lynn, and things of that nature. From a budget savings perspective, the things that we've been able to do with the MSL concept has been that by centralizing purchasing, we've maximized our volume license agreements by having all of our purchases centralized on the MSL. And in addition, we've controlled the distribution of software as well as the procurement, and we've lowered the number of purchase orders that we've had previously to buy software from, hundreds per year, thousands per year to, one PO for that title per month. So we've picked up process efficiencies as well as dollar efficiencies on savings by using this concept.
Hey, John.
Go ahead.
I'm sorry, to expand on that, you've also been in a stronger position when you have been audited. Is that correct, now that you have your own information?
That's correct. I mean, we're able to, with a lot more confidence and less stress, because we know that we have some funds behind us to go about the audit process in a way where we're not trying to deal with like some unknown financial disaster, that we're really just getting down to the nuts and bolts of working with the publisher or their auditors on what we own versus what we have deployed, and our focus is on truly on compliance as opposed to knocking our knees together in front of our management saying, we might have this much, we might have that much. We're prepared for what we have to pay.
Okay. There are a couple of questions here that have come in from the audience, both surrounding the same topic. I think I'm going to somewhat address this to Keith Rupnick first, and then if you folks would add any comments, that'd be great. How often do K through 12 or higher education institutions get audited?
K through 12 organizations, the auditing does occur. In terms of the frequency of it, I don't really have a statistical valid sample for that. We know that from our own personal experiences with our members, it appears to happen more in the high school than it does in elementary, though. And if anyone else would like to comment on that.
No, I have I have nothing to add to that.
Okay.
All right, another question here is, how has this process changed your relationship with those publishers that have audited you previously? John, that goes over to you.
The bottom line is being prepared and having a somewhat mature asset management program and having the funding behind it has allowed me to confidently go through the audit and create a wall of due diligence around my company. So I feel that every time a publisher comes in that first time and they leave, I don't feel they're going to be back because they didn't run into what they expected. What they expected was you weren't going to know anything about your software, that you weren't going to understand your compliance position or have the ability to go after it, and that you were basically going to roll over. The average audit that I've undergone has taken 4 to 6 months because we've been able to build this wall of due diligence around our company. So again, I feel the benefit is that the publisher is left with a better relationship with Quest Diagnostics because they understood the processes and the level of diligence we put into managing compliance, and that we were very honest and upfront and quickly settled with them on anything where we did have a compliance liability.
Okay. Here's another question for you, John. Is this expensed or capital monies? Because doesn't software licenses fall under capital expenditures?
It does not have to fall under capital expenditures. And the reason, one of the reasons that you have to remember too about what we're talking about here is that you're not going to capitalize something that you've been using. You've been consuming this software. You have expense associated with it. Just because you have to pay a bill, the bill you're paying for when you get audited or you're initially setting up your MSL is the bill for what you've already been consuming. And that is not a capital expense.
Okay. Based on having available licenses using this type of process, have you considered tracking the requests to purchase as cost avoidance?
Yeah, as Brett stated, on our managed software list, we don't hamper our users with understanding anything about licensing. What we do is we give them a software request portal where they request the software. They'll be charged back for the software if their workstation doesn't currently have the rights to the software or the software rights weren't moved to their workstation. And in IT asset management, we determine if a license purchase needs to happen. So that it's actually another way of building up your software bank account. What we do is when we take an application and add it to the managed software list, we grace everybody the software rights to what they have on their systems. And my department absorbs that expense if we're under compliance. But from that point forward, like I talked about proactively, any license expense that's incurred for the software showing up on your PC being requested or being just installed through a non-authorized manner is an expense of the consumer of the software, and all of the license compliance and the need to purchase is all determined by my group on a monthly basis. So we do not make unnecessary purchases on managed software list items.
Okay, here's a good one. As the program has become successful and delivered on its value objectives, how has this affected the workload and demands on the internal ITAM team?
It's increased it. I'll be honest with you. Our visibility has increased drastically, really beyond what I expected. We're really have become a key cog in the everyday licensing business of all of our enterprise. So, but what the managed software list does is give us a scope. So there's times where I do have some scope creep, but I always pull back to that scope that I've communicated what the managed software list, this is what the IT asset management program is managing. The rest is non-managed software and represents acceptable risk.
Okay, John, this will probably be addressed to you because of the fact that you mentioned you've been involved in many audits before, but I'm sure ITAM can add a few to this. Do you see any difference between an inquiry and an audit? Is one just as significant and potentially harmful as the other, or is there any difference?
Yes, there is a difference between an inquiry or review and somebody invoking the clause of a software, the audit clause of a software license agreement. In practicality, the exercise is the same to determine your compliance position, but in the review process, the publisher will likely let you purchase whatever shortfall you have through your reseller at any discounts that you've agreed upon, and you won't incur any audit fees as a result. On the other hand, if they invoke the audit clause of the agreement, then usually those agreements state that if you're more than X% out of compliance, you'll pay for the audit fees, and usually you'll pay retail pricing to the publisher directly as opposed to going through your reseller at a discounted pricing.
Anybody else? I think that was pretty clear cut. Can you tell me when is the proper time, in your opinion, to negotiate the fines if you're out of compliance? Is it best to negotiate when you receive the audit request, or does that make you look guilty coming out of the gate, in your experience?
In most situations, I haven't had the privilege of having to deal with an enforcement agency, which is usually where you deal with fines. I've dealt with publishers direct. Your publishers want to keep you as a customer. They just want they basically want what's coming to them. You can your efforts will determine what that is, but fines are usually imposed by organizations such as the Business Software Alliance, and I've been successful that in any inquiry from the Business Software Alliance where I've reached out to my publisher, who I'm a customer of, and explained my efforts in IT asset management, and that I don't believe that it's in their best interest to go have the enforcement agency they're sponsoring go through with the audit, and I'd be glad to deal with them in a review with them directly.
Okay, here's an interesting question. Do your vendors know about the bank account? And if they do, does that increase the risk of audit, in your opinion?
No, they do not. They do not know about it.
Okay.
And no, I do not believe it increases the risk of audit, because the fact of the matter is that again, they're interested in your business ongoing. They're not. Most of them are not interested in being hostile. It's not. It's really not a hostile event. You can through your diligence make it an event where you're going to make something a wrong right, and then you're going to carry it forward from that point forward.
Okay, here's one that may require some follow-up. What all should be included in your managed software list, and do you have example for viewing?
Brett, you might want to take that one.
Yeah, sure, I'll take that. There are actually quite a few attributes that surround a record in this managed software list, and that is something that, as Lynn mentioned in a follow-up, we'd be happy to dive a little bit deeper on that. But yeah, the managed software list is fairly comprehensive in what it tracks about the particular title.
Okay. The last question that I have here is, how do you ensure that the accuracy of the data is maintained going forward?
Oh, that's totally a part of your IT implementation process work. So you don't go live with this process until you have, with software asset management, until you've defined all of the processes that allow you to continue to maintain it. And what are some of those, like really quickly? You know, some of the things you're going to run into is that you're going to have to get your entitlement data. And not only do you need to get your entitlement data from your reseller or from as many publishers as you can, but you're going to wind up with having to do this exercise of normalizing the title names, because every other month the publisher or the reseller's records will change the name of something by changing the spelling of something. So you'll go through this huge exercise of basically calling Visio 2003 standard Visio 2003 standard on every one of its purchases, even though if you looked at the product description, it would be different on 4 or 5 different lines. It would have a different spelling. The other thing on the deployment side is you have to have the tools in place or the processes in place if you're dealing with named user licenses or things like that, where you can get your deployment data. And from there, it's basically, it's a simple exercise of maintaining that data on a monthly basis. But, I make it sound simple, but it's not. It was, like I said, our planning and implementation was 2 years, and even during the last 3 years, it's been a lot of continuous process improvement.
Thank you, John. There was one question here in regards to the white paper that Brett had mentioned on the ESI website. And I wanted to let everyone know that those are available under the Resources tab on their website. And if you have any questions or issues with that, you can certainly email someone at eTelligent Solutions. Here's the email address for sales@etelligentsolutions.com. If you have any other questions for any of our presenters that you think of as we move forward or over the next few days, be sure to send them in via email to this address here, sales@etelligentsolutions.com, or you can definitely send them in to info@itam.org, and we will pass those along to the folks at eTelligent or to John Mueller. And I want to thank everyone for participating in today's webinar, and especially our presenters, Keith, Brett, and John. As I stated earlier, any remaining questions will be answered via email after this session, and the presentation slides will be made available in PDF form from eTelligent Solutions if you request them as well. The recording will be made available early next week from the ITAM website, which is www.itam.org. And this concludes today's presentation. Again, thank you everyone for participating. Bye now.